Good morning, it's Harvey Jackson. Just going through some of the major news over the weekend. Of course, Iran leader is killed with a coordinated Israel, U.S., and I think now other countries are getting involved. England, as they have some air bases over there as well. So sounds like more and more are going to get involved, and especially as it impacts the market and the world here. UK base hit, U.S. planes crash in Kuwait. So there's a whole pile of different things that are kind of getting highlighted here. But third day of the conflict, regional turmoil as Iran strikes back, and they're striking some of their neighboring countries, which was maybe a little bit of a surprise, but and starting to try to hit the oil infrastructure. Of course, that's going to create a little bit more angst in that area for sure. And Trump is trying to suggest that they needs to be an uprising so that they can get a change of regime in there, even though you got the supreme leaders all dead. But yeah, we'll have to see how this all plays out here. So this is just a bit of a graphic here of what's the movement that's going on, and then of course the GPS all gets kind of scrambled here as well. But 20% of all global oil outflows are in this area. Here's the graphic that I just pulled from marine traffic, and you can see there's a whole pile of boats just kind of stalled here in waiting and not going through the strait, of course. I thought I would just pick some things from X here. So this was what would possibly be the impact, and yet India's named to get 50% of its oil from there, and then find an article just a short ways down there that they've stopped their dependency on the oil from that region. Now, who's right? I don't know. I thought this was interesting because here's the other products that are going to be impacted. It's fertilizer, methanol. Your crude is in there. Your minerals, natural gas, and I don't even know what some of these are. But of course, there's not a whole lot of grain going to be impacted. But when you have that much naval people around, it could be a time thing. So if this does last 4 to 5 weeks, expect to have some countries actually starting to basically hoard or get increase their stocks, food stocks, because it could turn into a longer drawn out battle. The other news that was significant, kind of called out on Friday that it's pending, I'm sure, because they had a date to have the anti-dumping tariff for the sea to actually get dropped. Now, the other part is, did they drop the oil? I'm assuming they did that as well, but going from 75.8% tariff down to 14.9, as it states here, for 5 years. It says it will last up to 5 years, but I think every year there's going to be a revisit of it to see if we're going to buy more of those EV vehicles and whatever else that we might have bowed to the communist regime there. Here's Darren Fessler just talking about crude oil here.
We look at the continuous crude oil chart. Yes, we gapped higher here, but again, when we look at those Fibonacci retracements from this high to this low here, this is a really big level between 75 and 79. If we find resistance here, I would say, hey, you're going to see a pullback in corn. You're probably going to see a pullback in soy oil. But again, it's all about these headlines. Do these headlines continue to bombard this market here? Because if you look at where all of these high level volumes are, man, they're just right into this area. So there's a lot of things that are like lining up. Like, hey, this is a massive area here. So again, we're watching this very, very closely. Anything above 79, though, boy, I think this thing could pop closer to 90. So we're going to just stay patient here. 70% sold old crop corn, 15% new. 100% sold old crop beans, 15% new. We'll see where the market.
Here we are. Just a quick look at the weather. So things keep shifting here. So you keep on seeing the snow and more moisture in the corn, soybean growing areas. It looks like it's going to be even more beneficial than maybe the start that we had last year. But it's hard to say. Here's your active weather rolling across there right now. Here's kind of a snowpack. It looks like we're going to get a little bit more snow in the prairies, and that's just for the next 10 days here. So here we are, canola just shy of 700 just as we speak here on the May contract, up 11.30, 6.99. Canola for November 7.01. Rapeseed 4.95. up $8. Soybean oil is up 1.62 cents. So what I might just start looking at is your percent of rise here. So you got 2.62%. Canola has only gone up 1.64, but crude oil is up 7.4%, and your diesel fuel is up 12.5%. So that's where the significant moves are. It's going to start here, and with time, you're very likely going to see some more elevated increases over here in the in wheats as well. You see hard red winter already just 4.5 cents up on only 1%. So it's lagging, but the oils are definitely going to take the run first. And if it looks like it's going to draw out longer, oil will find a balance of where they're going to be able to find the product, and then the food worries will come in if it's going to be a war that's going to be drawn out at any time. Canadian dollar down slightly. Here we are, still continuing above that trend line, up against that 61.8 retracement value. In November, right at that 701 area, and above that trend line up. Soybean oil gapped higher, so that's a significant thing to pay attention to, and it's trading right around that 63 and a half. Soybean futures not having the same kind of wins that the oil has had, but here the soybean oil and crude oil is actually supporting the palm oil futures. A nice leg up there. Your crude oil has that leg up. This is on a weekly chart, and then on the daily chart, there it is as well. But I'm just showing some of these high volume areas where we're going to run into some of this resistance, just like Darren Fessler was talking about there. Canadian dollar supported, still chopping away sideways right at the current values here. U.S. dollar finding some strength, but maybe some resistance here on a pivot here as well. Gold futures gapped higher, trying to get back to those highs that we made back in February, end of January. Silver, not the same kind of run up, but we're definitely getting closer to this $100 mark. Your volatility index, which definitely following some of these other supply problems as well. Wheat up against this 200-day moving average. We'll have to look to see if it's going to push through there. Same thing with the Kansas. It bounced off the 200-day and now trying to continue higher here. So we'll have to see if that continues to play out. Chicago, same thing. And your French wheat is just getting to the 200-day moving average. Looks like we're breaking out of that channel for corn and above the 200-day moving average. That's all I have for you. March 5th, we're going to have our stats scan.